In 2026, HMRC are going to be coming after more people than ever. And now, of course, I'm not talking about the millionaires or the very wealthy. I'm talking about you, the person who might bake cakes for their local community, a person doing a bit of freelance work on the side, a landlord maybe with one property, or the person who sold a bit of stuff on eBay and made a couple of grand. And here's the reality. Most people that get one of those brown envelopes through the door, they haven't done anything intentionally wrong. They're not tax dodgers. They are just ordinary people getting caught up in a net that's getting bigger, tighter, and more advanced every day. So I'm going to break down exactly why 2026 is going to be the watershed moment for HMRC compliance, what they're actually doing behind the scenes, and most importantly, how you can protect yourself. Because one thing is clear, you don't want to be caught off guard when a letter does arrive. So why am I specifically talking about 2026? What makes this year so critical? Well, it comes down to two fundamental things really. Number one is it's far easier now for HMRC to track you than ever before. They've been heavily investing in systems and technology over the last few years. And we're talking about billions of pounds going into things like AI, data matching, automated flagging systems. They can see your bank transactions, your online selling activity, your crypto trades, your rental income. They've got data sharing agreements with platforms, with banks and other countries, their tax authorities. Gone are the days when you could fly under the radar. Everything is digital now. You think about Apple Pay, you've got Google Pay, PayPal, bank transfers. All of these things, they leave a digital paper trail. And HMRC has the technology to follow that trail. And number two, and being honest here, it's just because the government needs money. They always need money, and HMRC is that direct pipeline to get that money from the largest group of people in this country. It's through taxation, lucratively through fines, penalties, and interest payments. Now, there will be a lot of you, or some of you, that will say, yeah, but HMRC is incompetent. They don't have their act together. And honestly, I can tell you, historically, there is some truth to that. They have had limited resources. There's lots of moving parts and things have always slipped through the gaps. But that's exactly why they're investing heavily in technology. Systems don't need coffee breaks, do they? They work 24/7. They can be flagging anomalies. They can run campaigns to identify targets. So this isn't a short-term play. This is an infrastructure that will generate returns for decades. And anyone who thinks that HMRC are just going to lose interest, it's just dangerously short-sighted. Now, as someone who's had oversight of thousands of HMRC cases, I can certainly tell you that we've seen a massive spike over the last year. There's more letters, there's more investigations, there's more nudge campaigns than the year before. And it's only going to increase. So what are these letters about? And who are they targeting? Now, the most common ones we see are around undeclared income. So that's people that typically it might be side hustles, people selling on Amazon, eBay, Etsy, Vinted. Because if you've made over £1,000 in a tax year, you have to declare it. And most people don't even know that. Then we've got crypto trading. They've got data from the exchanges now. So if you've been trading in crypto and you're not declaring those gains, they know. You've got to think now rental income, because there's a lot of people that are landlords just for one property, and any undeclared rental income or overclaimed expenses, or it's just not being accounted for properly when it comes to furnished holiday lets, you're going to be flagged. The side hustles when it comes to freelance work, and then anything basically outside of PAYE, consulting, coaching, tutoring, graphic design, photography. If money is changing hands and you're not declaring it, you're going to be on their radar more in 2026. Then we've got things like capital gains on property investments, selling second-hand property, cashing in shares. There's so much that they're just tracking right now. Now, something to note is that a lot of these letters are phishing letters. They're not 100% sure you've done anything wrong. They're just casting this wide net. They're sending out letters saying, we think you owe us money. Please review your affairs. And that's just a psychological tactic, because most people, they do get scared. It makes them panic, and then they just have to sit back and watch them voluntarily hand over information, with the outcome of money going into HMRC's hands. So let's talk about the surveillance state, and I'm going to be calling it that for the moment because that's exactly where things could lead. We've got HMRC's Connect, and this is their main data analysis platform. It was originally introduced in 2010, but it's had lots of development since then. And what it does is it pulls from banks, online platforms, overseas tax authorities, property records, and now social media. They have integrated things such as better algorithms and AI machine learning to identify patterns and flag discrepancies. We've also got bank account monitoring, and this has always been in place, but banks have to report certain transactions automatically. Large cash deposits, transfers from overseas, any regular income that just doesn't match declared earnings. And this is becoming easier for them to report because they can just easily link these systems, so it flags a lot quicker. Like I said, there's platform reporting, which that could be online or crypto, and there's all these sharing across the board of tax jurisdictions ultimately. So there's international cooperation. The common reporting standard means that tax authorities throughout the world are now sharing more information than ever before because they do appreciate it's the best way to get their own houses in order by working together to achieve the same outcome. So if you've got overseas assets, they're finding out about it. Like I touched on about the social media scanning, if you're posting about your business, about your lifestyle, your income on Instagram or any other social, and you're forgetting to declare that to HMRC, they are looking for it. And all these things I mentioned now, this is just a snapshot really of the bigger contenders. But the net is tightening. And if you think you're small enough to slip through, that's exactly what HMRC are counting on. And they've got their algorithms to flag your account. So at some point or another, you will get a review, you will get a letter. Okay, so now let's say that you've got one of these brown envelopes, and I've got one right here. And no, it's not about undeclared income, but this is around capital gains on a property that I sold years ago. Nothing to declare, but it just goes to show you that they are targeting lots of people. Now, the first thing you need to do is you do need to stop and take a breath when you do get a letter. I've got a separate video on this about handling HMRC letters in detail, but the core principle is quite simple. Do not have a knee-jerk reaction. Do not immediately phone them up and go, oh God, I'm so sorry. Yes, I owe you money. Of course I do. Here's my bank account. Take whatever you want. Because the reality is, receiving one of these letters, it does not mean you've done anything wrong. It does not mean that they have any evidence all the time. And it doesn't mean that you're going to get in trouble or be paying huge fines. What it does mean is that their systems flagged something. Maybe accurately, maybe not. Maybe you do owe them some money, maybe you don't. But rushing to respond, voluntarily giving information, admitting to things that you're not even sure about yourself, that's how you turn a fishing expedition into a successful catch. And even if you have made a mistake, and to be honest, you've got to understand that most people, it's completely accidental. There is a huge difference in I didn't know I needed to declare this and I was deliberately evading tax. The first one, you might owe some tax back, maybe a small penalty. The second one, that's when they will really go after you with everything they've got, and rightly so. So protect yourself. Don't make it easy for them. Don't walk in with your hands up ready to surrender. Get proper advice, understand what they're actually asking for, and respond strategically, not emotionally. Now, this is a good time to kind of pivot into making tax digital because this is coming in April 2026 for all sole traders, self-employed, landlords with income over 50,000 at the start. It's going to be a goldmine for HMRC, and I've again touched on this before. It's not about generating more tax, it's about generating lots of money through fines and penalties. So here's how it works in simple terms. Instead of that one annual self-assessment, you'll need to submit quarterly updates through MTD compatible software. If you miss a deadline, that's a fine. If you make an error, that's also a fine. If you submit it in the wrong format, you'll get fined again. And if you're not keeping digital records, that is a fine. And the data shows that people will fail. People do forget deadlines and mistakes are going to happen. So this is a big revenue opportunity for HMRC. But there is also another angle of MTD. It is deliberately annoying, it's deliberately burdensome. And you know what happens when you push too much compliance for small operators? They do give up. They will stop being self-employed and they will go back into PAYE, where tax comes straight out of their paycheck, straight to HMRC. They don't have to chase them anymore. That's strategy. If you make self-employment more administratively painful, that people will voluntarily return into the standard tax system when they're automatically drained every month. Less people are slipping through the net then. It's more predictable revenue for HMRC. And there's a whole lot of final income for the others that are going to stick at it. So if you're running any kind of side hustle or any business, any freelance work, if you've got any kind of small rental portfolio, MTD needs to be on your radar now. Because come April, if you're not ready, you're going to start hemorrhaging money pretty quick, probably just in penalties alone. Now, for the record, we disagree with MTD. We have our petition we started some time ago because we want to stop it for the sake of millions of self-employed and sole traders in the UK. It doesn't mean we're not prepared if the green light does still stand. Right, so enough doom and gloom for a minute. Let's talk about solutions, because there are always ways to protect yourself. You just need to be smart about it. So the first thing, and I've said this several times in lots of videos, you need to document everything. If you're doing any activity outside of PAYE, and I mean anything really, you need to be documenting it. You need to be keeping records. You can use accounting software if you really need it, but to be honest, a well-maintained Excel spreadsheet is better than nothing, and it does work for many. You need to track your income, track your expenses, keep receipts, keep bank statements, keep invoices. Just make sure you have that paper trail. And why? It's because if HMRC do come knocking, you want to be the person who opens that door with a comprehensive file in their hand of everything. And when they see that, they think, this person knows what they're doing. They're not going to be an easy target. It's going to cost us more to pursue an audit, an investigation in resources than what we're going to get back. So let's go for an easier target. Now, step 2 is, this is really crucial now, understand tax efficiency. Because what people don't really realize, or lots of people don't realize, if you're generating income outside of PAYE, you are running a business. And if you're running a business, you're entitled to deduct allowable expenses. Now, let me just give you an example. I said at the start, if you're making cakes for your local community, but let's just say you're making cakes, right? You make 3,000 revenue, so not lots of money, but HMRC writes to you and says that you haven't declared this. You panic and go, oh no, I owe tax on £3,000. But hold on, you bought ingredients, right? You bought the flour, the eggs, the packaging, you bought lots of equipment. You use part of your home for baking. You drive to deliver those cakes. You market on social media. All of that, that's all allowable expenses. So suddenly that £3,000 revenue, that figure that they have, you might actually owe tax only on 500 because of those legitimate expenses. And you only pay tax on profit, not revenue. That's tax efficiency, understanding the rules and using them properly. But most people just don't know this. They don't know what's allowable. They don't know how to calculate it properly. So they do end up paying more than they should. And think about it from HMRC's side. They're not going to tell you because it's not in their interest for you to be tax efficient. It's not. If you get it wrong, it opens the door for them to have more money and to issue penalties if you've over-declared. So if you're earning money outside of PAYE, don't wait for HMRC to contact you. Get ahead of it. Register for self-assessment if you need to. Understand the £1,000 training allowance. Know when you cross thresholds that do require declaration. Stay informed about changes. MTD is coming in April. Are you ready? Do you know what software you need? Have you got your digital record keeping sorted? If you've got an accountant, have they got a plan for MTD? If they don't even know what you're kind of talking about when you mention it to them, that's kind of a red flag, isn't it? You need to be proactive. It means being prepared. It means you're not scrambling when a letter does arrive. It means you're operating from a position of strength, not panic. Now, I'm not going to sit here and hard sell you on accountants, but what I will say is when it comes to tax efficiency, things do change constantly. There are reliefs, there are allowances, exemptions, and most people just don't even know they exist. Now, a good accountant isn't someone who files your tax return. There's someone who looks at your situation or your business and goes, you're paying too much. How can we reduce that legally? There's someone who understands the industry's specific reliefs available to you and the industry that you're working and operating in. There's someone who is constantly monitoring changes in legislation so you don't have to. And critically, if HMRC come after you, there's someone who knows how to handle it, how to respond, what information to provide, what to push back on. They're your shield. The way that I see it is ultimately, if you're running operations, whether that's a successful business, you've got multiple income streams, you've got property investment, the money that you should be saving through tax efficiency should pay for your accountant multiple times over. So that's not an expense. That's an investment with guaranteed returns. And if this applies to you, just give it a thought. Now, here's what it all boils down to. We live in a society where the majority of working people are in PAYE. Their taxes are taken automatically. They have no control. When the government wants more money, they just adjust thresholds and they just take more. And there's nothing that those people can do about it. Everyone else, the self-employed, the entrepreneurs, the landlords, the people with side hustles, whoever they are, they're the ones that HMRC has to constantly chase. And they're ramping up their efforts because technology now exists to make it more efficient for them to do so. But what really drives me to make these types of videos is because most of the people that get caught in this net, they're just not bloody criminals. They're not deliberately dodging tax. They're ordinary people who might have made a mistake or didn't understand the rules. Or generally, they didn't think their small side hustle income needed declaring. And that is absolutely reasonable. It's not everyone's dream to be a numbers and regulation guru. And HMRC knows this. They know most people will just panic and pay whatever they're asked to. And I know this because I've spoken to hundreds of people who have done exactly that. They know that most people won't claim all their allowable expenses. They know most people just won't push back or even get proper advice. And these are easy targets. They're soft targets. So again, the solution, knowledge, preparation, and not being an easy target. We all have an obligation to pay our taxes. We absolutely do. The country needs funding, public services need funding, and nobody's arguing against that. But we have zero obligation to pay a bloody penny more than we legally owe. Zero. If you're being tax efficient, if you're keeping proper records, if you're staying compliant and protecting yourself with proper advice, you're doing everything right. And this isn't about dodging anything. You're just not being taken advantage of. And in 2026, with HMRC and our government ramping up their efforts, that's going to matter more than ever before. So if you've made it this far, you clearly understand the stakes here. You get that in 2026 onwards, it's going to be different. You get that you need to protect yourself more than ever. So here's what you can do. You can download our free guide in the description. It's how to protect yourself from HMRC in 2026. It will break down everything you need to know about getting your house in order, what records to keep, how to stay compliant, understanding your obligations, and ultimately helping you maximize your tax efficiency. It's completely free, so download it, read it, implement it, because the worst time to be figuring this stuff out is when you've already got one of those brown envelopes in your hand. And look, if you're running a business, if you've got complex income streams, or you're worried about your current setup, or whether your accountant is actually protecting you, you can get in touch with us. We've got specialist teams throughout the UK dealing with e-commerce, property, freelance, MTD preparation. Whatever your situation, we've got the right people in the UK who live and breathe this stuff. All right? So it's not just about ticking boxes. It's about making sure you're keeping as much as your hard-earned money as you can, all legally, while staying compliant. Because in 2026, that's going to be the difference, to be honest with you. Links in the description for the guide. Now, if this video has helped, please do hit the like button and subscribe for more content like this, and drop a comment below, just letting me know, your biggest concerns. It could be around HMRC or just going into 2026. I try and read as many of the comments as I can and answer as best as possible. Key things here though, stay smart, stay protected, and I'll see you in the next video.